Hi everyone, welcome to the YaegerCPAReview YouTube channel, and I think it's really a good idea if you know how to do the journal entries for installment sales for financial accounting. Now, in order to do this, first of all, you should have your YaegerCPAReview book for 2011, and I want to go to page 69, multiple choice 54, and based on the information of 54, on page 69, the Gantt company, we're going to use that problem and do the journal entries. So it says Gantt began operations January 1st, 2010. They use the installment method of accounting. And they give you the installment sales, regular sales, cost of installment sales, cost of regular sales, G&A, and collections on installment sales. Now, in December 31st, 2010 balance sheet, what amount should Gantt report as deferred gross profit? Now, let's forget, we'll come up with the answer, but I'm going to show you the journal entries. Now, when you record an installment sale, you do the following. You debit accounts receivable and credit installment sales. I don't know if it's two L's or one L. Is it two L or one L? Okay, I don't know. All right? Now, if we look at the question, it tells us our installment sales are $500,000. So we'll credit $500,000 for our sales, and installment sales are sales on credit, debit accounts receivable for $500,000. So there's the first entry to record the sale. Notice, this is different from their regular sales. Now, the next entry you make is to transfer the inventory to the cost of goods sold. Now, only look at the cost of installment sales. The cost of installment sales are $250,000. So, the entry is debit cost of goods sold for installment sales and credit inventory. Now, how much is the cost of sales? The cost of sales are a debit to $250,000 and a credit to $250,000. Now, after you record the sale and the cost of sale, now you're going to close out the entries. All right? Now, here's the entries. We will do what? Debit installment sales, debit installment sales for $500,000. You will credit cost of sales, cost of installment sales for, by the way, $250,000. Now, the difference between the cost of the installment sales and the installment sales, normally you would think would be profit. However, if you remember, in installment sales, there's two types of profit. There's realized gross profit and deferred gross profit. Now, how do you get your realized gross profit in installment sales? Well, you take your cash collections, and now the collections, all right, can the camera get over here? All right, the collections are $100,000. Now, we're going to multiply that by our gross profit percentage to get our realized gross profit. Now let's get our gross profit percentage. Gross profit percentage is taking the installment sales of $500,000, subtract the cost of installment sales, $250,000. The gross profit on installment sales is $250,000. So if you take your gross profit on installment sales, $250,000, and divide it by the installment sales of $500,000, your gross profit percentage is 50%. All right? So we multiply the collections by 50%, and that will give me my realized gross profit of $50,000. So now we close out our installment sales. Just like any debit, you close out sales, credit your costs, and this is what you do. You credit realized gross profit for $50,000 I'm going to move my chair away, and you're going to credit deferred gross profit for, right, 500 minus 3, $200,000. Now, first of all, if you look at the question, they ask you how much is the deferred gross profit. It is how much? $200,000. Now, each year, I'm going to erase this. Each year, you're going to recognize a certain amount of that realized gross profit. So let's assume next year, all right, the collections are once again $100,000. The gross profit percentage remains the same. So next year, the second year, our realized gross profit is $50,000. So what do you do next year? All right, what you'll do is, all right, you will debit deferred gross profit. All right, this is in the second year, assuming my collection is 100 times my gross profit percentage 50%, realized gross profit 50,000. So if my realized is 50, all right, I reduce my deferred gross profit by 50,000, and once again I credit realized gross profit for 50,000. So each year, as you recognize a portion of the realized gross profit, you debit the deferred and credit the realized gross profit. Now, make sure you understand these journal entries because the exam has been asking questions on journal entries. And unfortunately, these journal entries are not in the Wiley book. So, anyway, I hope that helps you. Good luck, and we'll see you soon.